Good morning. My name is Dustin Angelo. I'm the President and CEO of Anaconda Mining. Thank you for joining us today. We wanted to take this opportunity to speak directly to the Maritime and Anaconda shareholders and other interested parties about our company and the merits of a combined Anaconda and Maritime resources. We believe it presents a compelling Atlantic Canada growth story in the gold space. I'm joined here by Gordana Slepchev, our Chief Operating Officer, and Robert Dufour, our Chief Financial Officer, two key players on the Anaconda team, a team that has great depth and experience. Together, we will make this presentation. So moving right along, Anaconda is a growing Atlantic Canada gold producer. So we have two primary centers of operation. Historically, we've been in the Baie-Verte Peninsula, where we've been operating the Point Rousse project for approximately 10 years. 8 years of those have been in operation and production. We've been producing about 16,000 ounces a year. Off to the east on the Baie-Verte Peninsula is our Tilt Cove property, and that's located in the Nugget Pond horizon, where it's historically been an area of high-grade gold. And then, of course, the subject of this conversation is the Green Bay project, the Hammerdown mine, which is on the southern part of the of the Baie-Verte Peninsula. So that's our primary center of operation where we've been in production for several years now. And then we also have the Goldboro project that we acquired last May 2017. That's located in Nova Scotia. It's about 180 kilometers northeast of Halifax in Guysborough County. We recently put out a PEA on that, and the average production rate is about 41,000 ounces a year over about 9 years. So together with the two properties that we have, these two main areas of operation, we have over 600,000 ounces of measured and indicated resources and about over 400,000 ounces of inferred resources. So it's a pretty large mineral resource portfolio between our two projects. And then if you layer on Maritime and the Hammerdown project, you know, we're putting on about another 1 million ounces on the Baie-Verte Peninsula and about over 2 million ounces in total for the company. So we're expecting a pretty high growth rate in the next 3 to 5 years. Our annual production right now, as I mentioned, is about 16,000 ounces a year historically, and now we're moving to about 18,000 as we move over to our new deposit called Stoggertite at the Point Rousse project. And then with the development of Goldboro, we're expecting to go to about 50 to 60,000 ounces a year by layering in those roughly 40,000+ ounces a year. And you know, from a standpoint of the regional consolidation effort that we're doing, we see the catalyst with the Hammerdown project to be able to go to about 100,000 ounces per year. So there's pretty significant growth trajectory with these projects and on the production side. And then when you look at the projects themselves and the exploration potential, we've got about 2 million ounces in total in these projects with a significant amount of exploration upside. So the growth trend is pretty high for this company in the near term just with our own projects, and then certainly if we can bring Hammerdown on. We also control exploration projects on the Northern Peninsula. It's called the Great Northern Project. It won't be the subject of this discussion today. They're more of earlier stage exploration and don't fit with the current business plan. So we're looking at ways to maximize the value there and potentially spin them out. In which case, both the Anaconda shareholders and hopefully if the Maritime shareholders come on board as well, they'll be able to generate some value from those from that spin out. So when you think about Anaconda, you know, we're a junior mining company. There are lots of junior mining companies out there, so there's a lot of competition, and we like to take some time to kind of explain to you how we differentiate ourselves. You know, certainly for the Maritime shareholders, I think it's important to understand sort of why this acquisition makes sense, and the reason to tender your shares is certainly it has to do with the team that we put in place. Our people are sort of the number one asset we have. We have a tremendous amount of experience in Atlantic Canada. Our senior management team has been a part of several different projects in Atlantic Canada. And from both the exploration perspective, development perspective, and in production. So we've been a part of projects at all stages of mining and multiple projects. So we have a long history in Atlantic Canada, individually and as a team, and we know how to do business in Atlantic Canada. Also, I think with the team we've built, we've been able to now attract more A players, more top quality management, and certainly as we grow and in the context of bringing on Hammerdown as well, we're very confident that we can attract more high grade people that can that help advance all of our projects. We're an established gold producer in Atlantic Canada. We're the only ones that have been around on a consistent basis for the last 8 years. So we certainly have a lot of brand recognition, both regionally and locally. I think all this is underpinned by a strong corporate culture. We have a culture of resourcefulness and innovation. We've done a lot of projects that are outside the box. We were a turnaround project, the Point Rouge project, from the beginning, and we were pretty resourceful to sort of turn that project around and make it profitable. And then as we've grown our company, we've worked on different ways to add value, doing different projects such as selling our waste rock from our Pine Cove pit as a construction aggregates product. We're looking at ways to repurpose our tailings into an agricultural product. We've got a narrow vein mining R&D project on the go right now that could have some tremendous value in the long term as well. So we've had these characteristics ingrained in us from the beginning, which I think is important for a smaller company that's had been able to find ways to be more efficient and get more productivity out of our assets given our scale. We're certainly experienced in mining at these small scales. The Point Rouge project's been in operation for about 8 years, producing roughly about 16,000 ounces a year. And over that time period, in the last 8 years, from the pit that you see here in the picture, we've been able to generate about $50 million in project level EBITDA. So we certainly have the ability to generate cash flow even at low production levels, and certainly at the grades. The original pit had a grade of around about 1.5 to 2 grams per ton, depending on the year. So we certainly know how to make money at these challenging levels. And then all this is underpinned by the operating infrastructure, and it's sort of what makes the transaction kind of compelling as well. Is over time, in the last 8 years, we've built some significant infrastructure at the Point Rouge project. It's underpinned by a 1,300 ton per day mill. Now we have tailings capacity over 15 years. The original Pine Cove pit that you see in this picture here, that was converted recently to an in-pit tailings facility. So we have a significant amount of capacity for a long period of time. And of course, we also have our deepwater port that was facilitated by the aggregates project that we did most recently. So all this operating infrastructure is what's been put in place, and it's a tremendous amount of value to be able to leverage that infrastructure and use it locally as we open up other pits around the Point Rouge project, and of course regionally where we can truck in ore, particularly from Hammerdown and other areas, and to be able to leverage the infrastructure, not have to build out infrastructure in other areas, full-scale infrastructure, and be able to be more efficient with our capital. And then of course, the infrastructure we have at Point Rouge is even being contemplated for our Goldboro project in Nova Scotia, where we are using that to produce the final doré bar when we bring a concentrate back from Nova Scotia. So that's the infrastructure and the reasons why we think we have a competitive advantage in Atlantic Canada. So as I mentioned before, our team is we're experienced. We're invested in our company. We run safe and profitable operations. We have a strong board and advisors with capital markets experience, with technical expertise, and together we own approximately about 8% of the company. And then, why we're here today, the reason we're here today is because of our consolidation strategy. Anaconda is a company, it's a growth company. It is looking to get larger. As I mentioned before, we think we have the underpinning, the infrastructure in place as a platform to grow larger in Atlantic Canada. We see Atlantic Canada as an area that's ripe for consolidation. There are a lot of projects in Atlantic Canada that are less than 1 million ounces that have 43-101 established resources on them, but they need a catalyst. They need to be brought together under one umbrella. These projects have value, but truly to unlock that value, they need to be consolidated. So we see ourselves as the one that can do that. We were successful last year by acquiring Orex, and that had a tremendous impact on our company and our stock and on our exposure. And we think that by bringing in Hammerdown as well in the Maritime, that would only help catapult us to the next level. So, we're a consistent gold producer. We have established infrastructure. We have the experienced management team. We certainly have the credibility of being able to do transactions since we did one last year. And we're focused on this area that is probably underserved in the market but has tremendous value. And we think that if we can affect this strategy, we will be able to unlock a lot of value for all of our shareholders.
As Dustin mentioned, I think the key to this consolidation strategy is to have the team that is able to execute on its business plan. And what Anaconda has demonstrated over the past couple of years is that ability to do so, of course, safely, but profitably. And the numbers really speak for themselves. Going back to the fiscal year ended May 31st, 2017, the company produced over 15,500 ounces and was able to generate EBITDA at its project level from the Point Rousse project of over $8 million. And that year was able to generate cash flow from operations, and important to note that that's after paying for corporate costs of over $4.7 million. Likewise, another successful year for the period ended December 31st, which was a stub year as we've changed our year end. Again, we produced 10,000 ounces, which was over our prorated guidance for the year, generating $5.6 million of EBITDA at the Point Rousse project level and generating, again, $2 million in free cash flow from our operation after paying for our capital costs. 2018 has started off as a great year as well. For Q1, produced over 4,200 ounces, generated project-level EBITDA from our Point Rousse project of $3.3 million, and we were able to generate almost $1 million of cash flow from operations. Not only does this demonstrate our ability to operate profitably, but what it allows is, as a company, for us to reinvest back into our assets to grow value for shareholders. And when you look over those last 3 periods that I've used as an example, we have done just that. In the fiscal year 2017, we invested $6.2 million into the ground in various development projects. Last year, almost $2.5 million, and this most recent first quarter, almost $2.1 million. And what does this get? Well, we've seen that value creation very real in our share price over the past little while through the development of the Point Rousse project, notably Stoggertite coming online, the discovery of and growth of Argyle, which is now en route to becoming a development project, and of course the Goldboro project, which is showing itself to be a world-class high-grade asset. And because we're able to do that from cash flow, we're able to minimize dilution to our shareholders.
Anaconda Mining has about 1.67 million ounces on the book. The majority of the ounces are coming from our flagship project, Goldboro, where we have finished and published in March this year preliminary economic assessment. So looking into starting this project as open pit and then transitioning into underground, somewhere in upwards of 900,000 ounces. Also, a good share of the ounces are coming from our Point Rousse project, about 120,000 ounces from Pine Cove, Stoggertite, and Argyle deposits. Those would be measured and indicated, and as well about 70,000 ounces would be coming from the inferred categories. This year, with publishing Point Rousse updated the NI 43-101 report, we were happy to announce maiden resources at Argyle, total about 70,000 ounces. At this point, when publishing the NI 43-101, we were not able to publish reserves at Argyle, but we have done internal work both on creating the block model and progressing with the engineering and had put optimized pit shell. So at this point, as Rob and Dustin mentioned before, we're looking into permitting Argyle deposit. We have submitted environmental assessment registration with Newfoundland and Labrador, and we're also looking to put in development, rehab, and closure plan. The big chunk of the resources are coming from the Great Northern Project, somewhere about 600,000 ounces. About 100,000 ounces would be coming from the Tor deposit, and about 500,000 ounces would be coming from historic resources. As mentioned at this point, the only reserves stated were from the Point Rouge project, somewhere close to 900,000 tons, or about 35,000 ounces. And we're working towards declaring the reserves both at Argyle and Goldboro, with finishing feasibility study, which we intend to start somewhere in July this year. So as Dusty mentioned before, Goldboro project is located in Guysborough County in Nova Scotia. It is a very, very rich gold system consisting of gold found in the quartz and wall rocks, and also reminds the readers on the Bendigo Formation in Australia. So at this point, we have discovered about 33 belts. Anaconda have added 3 with the recent drilling completed in 2017 and 2018. We have done so far above 80,000 meters in drilling in 450 holes. About 50 holes Anaconda has completed in 2017 and 2018, and we have been putting quite amazing news releases and results from this drilling. We've been finding high-grade intersects and also been finding some very wide zone, especially in the area of intended bulk sample. If you look at the figure in the middle, you can see the structures, and the green blurb in the middle, it's actually area of the historic development. This project has been a home of the historic mining on turn of the century. They have actually produced about 55,000 ounces with reconciled grades above 6 grams. This system has been extended from its original stage in the last year. We have added up about 100 meters towards the east and 3 new belts. As well, we have widened up this system for another 100 meters on both north and south side. And as well, with the deeper drilling in the Boston-Richardson area, we have added up about 150 to 200 meters down to its depth. If you were to imagine that we could cut this system along the long axis, then we would have a look on the long section. So as you can see on the screen, this long section shows all 3 mineral systems that comprise Goldboro. Of course, on the west-west Goldbrook, in the middle is the Boston-Richardson system, which has been a home of historic mining. That's that great shade you can see on the screen. And on the east is the East Goldbrook. So our goal with the recent drilling was both to expand the deposit, to grow it, because it is open along the strike and down the dip in all directions. So we've been successful, as mentioned, adding up 100 meters to the east, and we have been also successful in identifying further belts and continuation of the Boston-Richardson system, which is in the center. All these big green dots on the screen are actually the holes we drilled, and all these red dots are visible gold occurrences. As well, we've been just finishing and published last week bulk sample results, really encouraging results, really high grades, 21 grams over 11.5 meters, 14 grams over 7.5 meters. And that's all in the area of the plant bulk sample. If you look in the middle of the slide, that's the area close to the surface with most of the red dots. And then if you were to imagine that this system is cut across the section. One of the typical sections is shown on the left side of the slide, showing all these different belts. As mentioned, a number of the new belts were identified, and some old extended both along the strike and down the dip. The important thing here to note is we're really, really encouraged with the drilling, with all these results, and we are thinking that we could grow this project to double its size to 2 million ounces or more.
Thank you, Gordana. And really what underpins the real exciting opportunity with Goldboro is the preliminary economic assessment that we released earlier this year. Notwithstanding some of the exciting results we've had very, very recently, this is a very robust economic project. At a $1,600 Canadian gold price, and we've actually been tracking much closer to $1,700 this year, this project has a 5% NPV of over $150 million and an IR of 41%. And on an after-tax basis, again, 5%, $81 million NPV. So very robust. Will produce over 375,000 ounces over its life of mine, which is, as of today, modeled almost 9 years and approximately 41,000 ounces per year, and very low cash costs. Operating cash costs Canadian of $654 per ounce or $525 US, and an all-in sustaining cash cost of under $800 Canadian per ounce, which leaves some very good margin on the project. The grade over the entire life is expected to be over 5 grams per ton, and in the underground component will actually approach 7 grams per ton. The capital cost, upfront capital cost of $89 million includes $50 million in contingencies. We think there's some room for optimization there, but also noting that the plan is to go into an open pit mining phase first, which will certainly generate cash flows and which will help fund part of the underground development in around years 2 and 3 when we would go underground. And as I've mentioned earlier, this was at a $1,600 Canadian gold price. This project is very strongly leveraged to gold price, and it is a very robust PEA. When we announced PEA, we did it actually at a $1,550 Canadian price, and it demonstrates it is robust even at those levels. But what you can see, looking at the screen here, is at a $1,700 gold price, which again has been certainly very much our reality for much of 2018. On a post-tax, after paying tax base at 5%, this project is a value of almost $100 million. And that's the Goldboro area, Nova Scotia. But when we've talked about Point Rousse and the upside that continues to be there, and then obviously we'll speak about how we see the Hammerdown fitting into that. But what has been mentioned earlier by Dustin, the Point Rousse area is an established gold producing area, and you will see that gold production has remained consistent over the past 8 years. If you look at 2017, it seems to drop off, but that was actually a 7-month stub year, and in that year we actually exceeded the original guidance we had for that. And this year we're guiding to 18,000 ounces of production, which is really demonstrates the higher grade that we're starting to get from our Stoggertype mine. And our guidance is operating cash costs of about $1,100 Canadian per ounce, which has been our historical average. However, in 2017, our operating cash costs were Canadian 1,000, and in the first quarter to this year, we were able to operate at $900 Canadian operating cash costs per ounce. So we think, certainly Q1 was a great start to the year. We think Q2 will be a very good quarter as well. And so that sets the scene for the growth story at Point Rousse.
And the growth story would continue at the Bayreuth Mining Peninsula, where we actually have 3 very prospective trends. The most southern one, Scrape Trend, where we're currently mining. At the Pine Cove, we're moving along this trend to Stoggertype. As Rob mentioned, we have started mining this year there, starting with the stripping, and we also have started moving the ore. We actually have a test batch processed last week, and we're really encouraged with the results. Also, there is a Golden trend somewhere in the middle, and on the north of the peninsula, there is also a Deer Cove trend. Anaconda has finished mining the Pine Cove pit in March this year. We have expedited mining of this pit, so we can stockpile ore quite high quantities, so we can transform the main pit into in-pit tailings facility. We did this to save the capital and also to utilize the money and proceeds from the gold sales for developing the projects, both Point Rousse and Goldboro. We also plan to process all these stockpiles ore during the next 2 years, and then we would proceed with mining of the Argyle deposit. We have registered Argyle deposit. We're planning to submit development and rehab and closure plan. But also we've been doing a lot of work on the Bayward mining peninsula, Mingus Bight Peninsula in particular, focusing on all these gold occurrences, especially on the Anaconda. Anaconda is the showing south of the Pine Cove pit and shares the same geology and the same rocks as it does producing Pine Cove pit. The Pine Cove pit would see 2 more pushbacks, which we plan to do in 2019. So our focus would be Argyle, then drilling and expanding this project both along the strike and down the dip, and also focusing on Deer Cove. We would see some geophysics done this year, planning about 30 kilometers of the geophysics and about 5,000 meters of drilling. So when talking about the Argyle, we actually have declared maiden resources this year. We followed up in 2015 on some of the surface soil samples. So we have done trenching, and with very, very modest amount of drilling, less than 5,000 meters and about 75 holes, we were able to declare a resource of close to 70,000 ounces. So we know this project is open in all directions, along the east, west, and down the dip. And we're very encouraged with the current drilling. So far, there are some great intersects, including 5.5 grams over 15 meters, 9.3 grams over 6 meters. So we would be following up with more drilling, geophysics in the very near future. We actually have put the press release, putting out intentions to work and develop this peninsula, which we think has great prospectivity, so it is going to continue to feed Pine Cove Mill.
So we've talked about Anaconda, who we are, our strategy, and the assets that we have, and now let's turn to the Maritime transaction itself. I think it's a pretty compelling transaction for both parties. There's a significant operating rationale to this. We both operate on the Bayward Peninsula. What we'll be able to create here is a consolidation of this area. It's an area that has a lot of the geologic features to find more gold. There's 2 key fault systems running up the east and west side of the peninsula, and all of the historic production, our current production, and a lot of the discoveries all along those areas. We would be consolidating this area. We would have the current production coming out of the Point Rousse project. We'd be developing the Hammerdown mine and trucking that ore back to the Pine Cove mill. And then, of course, we have exploration projects, the Till Cove project on the eastern side of the Bayward Peninsula. Maritime also has some exploration projects. We're looking at other projects as well in this area. And we'll be able to create a very tight-knit, close geographic system, hub and spoke system, and a long period of time we'll be able to explore, develop projects, and produce in this area, and basically control the whole area. So it's a pretty compelling transaction just from that one standpoint. If we're successful here with the current production out of Point Rousse and then bringing on Hammerdown, you'll be putting about 50 to 60,000 ounces a year through this mill. And that's just basically at the current production rates and grade, and assuming what the pre-feasibility says for the Hammerdown project, right? We believe that we can fast-track this project. Of course, all the infrastructure is in place. There's a mill, there's tailings capacity, there's the The mine can be opened up. The permitting we think we can do within 2 years or less. We've gotten favorable response already from the government on being able to fast track this project. So we think that that's certainly a reality over the next 2 years or less. Also, we think that we can improve the economics of the project, both on the capital side and on the operating side. Obviously, from an operating perspective, the pre-feasibility study that Maritime put out, they contemplated using the Nugget Pond Mill. The Nugget Pond Mill is much further than the Pine Cove Mill. You actually have to drive past our site in order to get to the Nugget Pond Mill. So we would have a transportation advantage there. From a general administrative perspective as well, we're already there in the area. We have our administrative staff at the Point Rouge project, so you wouldn't have to replicate that at a full-scale basis down at Hammerdown. So there's a couple of different operating areas that we can see some improvements. And then, of course, on the capital side, we believe that maybe we can lower the capital, particularly use more of the underground workings and have to do less development. I think one of the key things to understand here, too, is that one of our vice presidents used to be the general manager of Hammerdown, so we do have an intimate knowledge of the project, and we think that we can use that to maybe not have to do as much development work, knowing sort of what the underground workings look like and how they were closed up. Also, the pre-feasibility study contemplates buying underground mining equipment. We wouldn't do that. We would hire a contract miner. That's been the practice at Anaconda. That's what we use currently at our Point Rouge project for surface mining or open pit mining. So we would hire an underground contract miner. So we would still incur costs, but they would be on an operating basis over time versus having to raise the capital up front. So we'll be able to lower the upfront capital cost. And of course, I think when people look at this transaction, in particular these assets, they're pretty complementary. I think both sides bring a lot to the table. Certainly, Maritime is bringing to the table the Hammerdown project. It's a high-grade project, a significant amount of measured and indicated resources. But don't forget, in order to make this happen, Anaconda is bringing everything else to the table. We're going to have, we've got the 1,300 ton per day mill. We've got the tailings capacity. Of course, we've got operating cash flow currently, so that can help offset cost and financing pressures. We've got a significant amount of measured and indicated resources. We are bringing to the table also a high-grade project in Nova Scotia, being the Goldboro project. And probably most importantly for the immediate area is the experienced management team. We've been operating this area for 10 years on this current project, our Point Rouge project. We have an intimate knowledge of how to do business in the area. We know the rocks, the geology. We know how to do the permitting. We have the relationships with the government. So there's a whole lot of assets that we bring to the table, and we bring them together with Hammerdown, and we can create a significant operation on the Bay River Peninsula.
Just to segue into what Dusty was talking, we have put together the development plan that would include, of course, hauling all this ore to our existing milling facility at the Pine Cove and using existing tailings for the storage. If we were successful, we're anticipating that we would get a hold of the property in second half of the year. We would proceed first with permitting and community relations. We have established quite good relationships in Bay River area where we operate now for 10 years. Also, we would start working on dewatering and rehabilitation of the existing ramp. The existing PFS suggests that this ramp or parts of this ramp would be used for development. If we can rehab and use the entire ramp and change the mine plan, that would see significant impact on the capital cost and would speed up development of the project. To be able to do this, we would start feasibility study as soon as possible. Also, we want to grow this project. So in order to do so, we would start with infill drill program. And prior to starting the program, we would, of course, have to have a look on the core, check the core sample, At this point, we're looking to drill probably somewhere about 200 holes or about 40,000 meters. All these drilling wouldn't start the day one, of course, so there is some due diligence that we would have to do first. And of course, we would have to finish and close the financing prior to moving with the development. In the first half of the next year, we would see the engineering work continues also on geotechnical and hydrogeology, because there is no existing data as we know it now and as it was publicly announced. We've been looking to finish and complete feasibility study and also bring power to the site. For the rehab work, we may bring limited amount of the power, or we may use generators. At this point, we haven't decided on these details yet. The big part of this would be actually hiring the underground contractor. As Dustin mentioned, we don't envision buying equipment, but actually hiring a contractor. And then we would evaluate the need for underground bulk sample. At this point, we think we can use our existing mill as is to process hammer down ore. And to prove this, the hammer down was in production from 2000 to 2001, and all the ore was processed at the Nugget Pond mill. Also, at its beginning, Anaconda used to process about 80,000 tons of the ore at the Nugget Pond mill. Our current mill does consist of the flotation circuit, crushing, grinding, and leaching. For the hammer down ore, we would bypass flotation and use only crushing, grinding, and leaching, and also Merrill-Crowe for gold recovery. So looking and progressing with the engineering and the development, as Dustin mentioned, we've been already having some discussions about the permitting. We want to expedite the permitting and hoping to get all the permits in place by the second half of the year, where we actually would start with site construction, and we would get the underground contractor to start with underground development. Pending all these developments, permits, we're looking to start commercial production somewhere in early 2020.
So let's talk about some of the benefits of this transaction. I think first off, it's important to point out that this type of bid process, that if you want to accept Anaconda's bid, you actually have to tender your shares and actually do that. If you do not tender your shares, then you're effectively voting for the status quo. By tendering to the offer, you're receiving a premium, a 64% premium compared to the 20-day VWAP before the transaction the bid was announced. The company, the combined entity, the pro forma entity, will have a higher market profile. We're already getting interest from several different financing sources because of the potential here that everybody sees. There's obviously the potential for re-rating. You're talking about a company now that could be on the path to 100,000 ounces a year of production once Goldboro and Hammerdown are in production. We'll be able to accelerate the development of Hammerdown. As we've mentioned before, our mill is ready and available now. Our tailings capacity is available now. Our team is in place now. I think it's important to understand that Nugget Pond, which is the mill that's been contemplated in the pre-feasibility study, isn't available right now. It needs grinding capacity. It needs tailings capacity. So it's not something that can be executed upon immediately like we can when we close this transaction. Also, you're getting a full management team and a board with a high standard of corporate governance. So that's a pretty compelling aspect as well. If you're thinking about not tendering, then essentially you are going to continue or will default to the status quo. In that sense, there's been no meaningful progress made at Maritime over the last couple of years. There's been a lot of financings done, but they've been done at successfully lower prices. so they've been down rounds. Nearly half of the money that's been raised over the last roughly 3 years has gone to G&A. It really hasn't gone on the ground to really advance the project. And the plan, I think this is an important part too, the discussion in the director's circular about a plan, they don't really talk about a plan. We have a plan. Gordana has outlined the plan. You just heard about it in the previous slide. We are ready to go, and I think we know the steps that need to be taken, and we've done this many times. Gordana is on to her 5th development project with Goldboro, and then Hammerdown could be the 6th. So we've got everything in place to get started now, and which I think is a pretty important part of the value here. Time value of money is important consideration. There are other benefits to the transaction. Obviously, in this transaction, you would be getting Anaconda shares. We trade on the Toronto Stock Exchange and also on the OTCQX in the United States, so we have a greater reach than the TSXV. Certainly, it opens up to more investors and it opens up to more liquidity. Our trading volume has been a lot higher than Maritime. When you look at prior to the announcement of the intention to bid, I believe that our trading volume was probably about 20 times in dollar amount than Maritime. So significant liquidity there relative to what Maritime was trading at. The combined entity will be over $50 million in market cap. We will have more exposure. As I said before, we're already getting more exposure just on the potential of bringing these companies together. Then the analyst coverage we think will come on as well. We currently, Anaconda has 2 analysts covering us, and we believe there'll be a 3rd immediately upon closing. And then, of course, it could expand from there. So there's certainly the ability to get more analyst coverage. Certainly access to capital. As I mentioned, we're already seeing the interest, across, the equity funds, different types of debt financing, alternative financing, different ways to sort of be able to finance the projects and bring them in at the lowest cost of capital. Of course, we also have our cash flow that's coming out of the Point Roost right now that can help mitigate our financing pressures at certain periods of time. So we're not completely beholden to the capital markets in any particular period. And then, of course, this is a large mineral resource portfolio. When you put together what we've got on our books, our primary projects being Point Roost and Goldboro, and then you bring on Hammerdown and Orion as well, you're looking at over 2 million ounces of gold there. And then, of course, we do have our non-core asset on the Great Northern Project, which has got over about 600,000 ounces. So in total, it's a very substantial mineral resource portfolio. It's over multiple projects in 2 provinces. It's got a lot of growth potential. We're demonstrating that at Goldboro. We're certainly seeing it locally at Point Roost. And I'm sure we believe, and I'm sure the shareholders of Maritime believe, that there's growth potential at the Hammerdown project and the adjacent deposits. Of course, this would also mean for the Maritime shareholders that if all these assets are combined together, the risk of single asset is mitigated. And of course, it's sort of buoyed by having 2 main projects that are pretty high-grade gold. So there's substantial benefits here for all parties involved. When you look at the pro forma company, it's, as I mentioned before, it's over $50 million in market cap, very little debt. Our debt is our capital leases and government loans, so very low cost of capital. The cash combined basis is about $3.2 million based on both of our balance sheets as of March 31st. As I mentioned before, the mineral resource is pretty substantial. M&I at 1.2 million ounces, inferred resources at 1.1 million. This doesn't include the Great Northern Project. And of course, the potential to march ourselves towards 100,000 ounces a year of production. So at the end of the day, all of what we're putting together here has got the potential to re-rate the combined entity. Right now, separately, we're trading well below the peer average here. Of course, the Maritime shareholders will be getting a premium right off the bat, so they can see a lift. And then we're still below the peer average. But together, when you think about having current production, 2 projects that are high-grade gold that could be in production in the next couple of years, and a path to about 100,000 ounces a year, we can see ourselves marching up this graph here and being more towards the left side of the page, which would be a significant re-rating and a significant value boost. So one of the other things we wanted to cover are some of the frequently asked questions, so that everybody is sort of aware of the key issues that Maritime shareholders are concerned about. First and foremost is the Anaconda offer fair? The offer we're making is a premium offer. Based on the 20-day VWAP, as we mentioned before, it's over 60%. I think we're offering stock here, and we're offering stock because we want the Maritime shareholders to be able to participate in the growth of this company going forward. We think we're on the precipice of something really great here. And as you saw in the previous slide, there's a potential for a significant value creation. Maritime has been doing financings recently. They recently announced the financing, and the recent financing was just slightly under 10 cents a share. And that's far below what we're offering. So when you look at it, I think what we're offering is a pretty fair and full valued offer. I think that when people look at the pre-feasibility study at Maritime and the Hammerdown mine, there's a significant valuation there, but there's also a significant gap. I mean, it's the difference between where they're trading at today and what that pre-fee says. You have to look at the market is factoring in the execution ability of the management, the current management, and also the ability to finance it, right? At a roughly $8 to $10 million market cap company, it's pretty difficult to be able to go out and raise the kind of capital that they need to raise, which in their pre-fees is nearly $70 million. So another question is, am I better off waiting for Maritime strategic alternatives? I think if there were alternatives, and alternatives that would be better than what we can bring to the table, I think they would have surfaced already, and they just haven't. In this process, Maritime over the last couple of years, we've tried to engage Maritime and have fulsome discussions about a strategic alternative being us and combining the companies. And in that time period, what's happened is just more financings from Maritime and no measurable improvement in the company and the stock price. They've done a little bit of drilling. They've optioned some non-core property and basically spent a lot of money on G&A. So I think if there was another bidder out there, another alternative that was more compelling than ours, I think it would have already surfaced. And then why tender now? Why not wait until the deadline on July 27th? You certainly can wait until July 27th, but what I would tell you about that is that first off, it's just wasting a lot of money. It's wasting your money. It's a costly process here that we're going through for both Anaconda and Maritime, and certainly we're a cash flow generator, so we've been able to manage this quite fine. I would doubt that Maritime has been able to handle it the way that we've been able to handle it, hence the reason for another financing. I think you can always withdraw your tender if for some reason something happens where that would compel you to do so or want to. So there's no downside in tendering. I think there's just a lot more upside in tendering because then we can have a resolution to this a lot sooner and we can start moving to the value creation stage. If this deal doesn't happen, I think it's got a tremendous impact, negative impact on the stock of Maritime. I think it's going to significantly drop. And most importantly, too, I think the liquidity is going to dry up. I think that what we're offering is a compelling offer. I think there's a lot of synergies here, and both shareholder bases will be able to do well with this transaction, and ultimately in creating a lot more value. So, on a practical note, how do you tender your shares? Depending on whether you hold them directly or indirectly, there's different ways to do it. And at the bottom there, you can see the information for Kingsdale. That's our information agent on this process that's working with us. They can guide you through and make it very easy and simple for you to be able to tender your shares. So with that, the presentation is concluded. We always like to conclude and leave the last slide being a picture of our employee base and the folks that make Anaconda go. I can tell you wholeheartedly, Maritime shareholders, that these people that you see here in this picture, and then there's many more behind it, that you can rest well at night and you can sleep well at night knowing that these people are running this company, and your shareholder value will improve because of these people. So if we've got some questions, we're happy to answer those. I'm going to go and check here. How do I do that? 1 second. Okay. We have many questions. Let's see. So the first question we have, is there a required minimum amount of shares tendered to continue with the deal? So the way the process works is that there's a minimum of 50.1% of the shares must be tendered in order for Anaconda to be able to take them up. The main threshold for us is 66 2/3, where at that point, if we've got 66 2/3 of the shares, then we can effect a plan of arrangement and complete the deal. But at 50.1%, we can still acquire those shares, and we would acquire those shares. We would just be the largest shareholder of Maritime. Let's see. So what's your best estimate of actually starting to put high-grade ore through the mill? So as we mentioned, our goal is in 2 years or less to be able to have Hammerdown into production. We've got to work through the permitting process and dewater and then develop the mine. But based on the feedback we've gotten so far, at least on the permitting side, that we feel that we could be able to be in production at Hammerdown in 2 years or less, and in which case we'd be able to truck that ore back to Pine Cove and start milling as soon as possible. Okay. Another question is, how do the capital costs of Hammerdown compare to Goldboro? How do Anaconda's proposed timelines for each compare? Somebody want to take the question about capital?
Sure. The pre-fees right now that's on the table for Hammerdown is approximately $70 million Canadian, which maybe 67.5, something around there. As Dustin's alluded to, we believe there is a lot of room there to save on capital costs. Certainly looking at using contract mining, which we have done and which we have the ability to do so fairly easily, and save some costs up front. But there are certainly other ways where we think we can really optimize that. So the capital cost requirement for Hammerdown are likely going to be a bit less than they are for Goldboro. And probably what naturally will happen, given the relative permitting process of each project, is we will see Hammerdown come online first within the next 2 years, as Dustin has alluded to. And we believe that the capital cost in that will, certainly relative to the potential upside, the potential value there, and lend itself well to project financing, and we've had no shortage of interest in that project. And then that will feed well into bringing on Goldboro, perhaps with a production start date 2021 to 2022, which I think certainly, again, naturally will happen in itself, but will enable us to use some of those cash flows from Hammerdown to bring on Goldboro. And again, that all gets us toward that vision of becoming one of the next 100,000 ounce producers in Canada.
And also maybe to adapt to Rob's discussion is that the Goldboro capital would be split in two tranches. So the first initial capital, somewhere about $45 million, or somewhere about 35, excluding contingency, would actually come first for the concentrator design and also for the site setup and development. The second half of the capital requirements would come in the second and the third years of the development, and would be more focused onto underground development, installation of the systems, the ventilation, and all other services that would be required to bring underground portion of the Goldboro deposit into the production.
Okay. So we've got a couple more questions here. Somebody asked, how many shares are tendered? At this point, what we can tell you is that we started the process with about 12% of the shares already locked up. It has been progressing really well. This is a process that people are taking their time with. It goes till July 27th. We would encourage folks to tender sooner, as I mentioned before, ideally by the end of this month. But we've got a decent amount already tendered. We haven't hit the 50.1% mark just yet, but I think because of the time that people have, folks are just waiting to see what's going to happen, and then essentially do it at the end. But as we mentioned before, if we can do it sooner, then we can move on to the value creation stage. But it is progressing well, and it will take as much time as needed in order to sort of finally get us over the edge. Let's see if we got other questions here. So somebody asked if we can comment on Atlantic Gold. I think Atlantic Gold is kind of a good peer for us. It's obviously a much larger company, a much larger market cap, but it's affecting the same strategy, just focused in Nova Scotia. They've got the hub and spoke strategy where they've got a centralized mill, the Moose River Complex, and they are they're opening up ultimately in the long term mines further away that they'll be concentrating ore and bringing it back to the Moose River Complex. So their goal is to ultimately have about 200,000 ounces a year of production. They're currently on course for roughly about 90,000 ounces in their first year. By all accounts, they seem to be getting off to a good start, which bodes well for us in Nova Scotia, and showing and demonstrating the ability to put in projects in Nova Scotia. Their market cap is $300-400 million, and we're trading at $40 million right now, pro forma over $50 million. So you can see, as a potential comp or a company to aspire to, potentially where we could ultimately end up if we can at least hit the 100,000 mark and then go beyond that. I think somebody else had a question about the Great Northern Peninsula and how that fits in with the consolidation strategy. I think what we want to sort of make sure that people understand is that the consolidation strategy, we're looking for more near-term projects that could be put into production, that have established significant amount of 43-101 resources on them at very good grade. We think that the Great Northern Project is more of an early stage play. It's not easily fitting into our infrastructure. What we're looking for are projects where we can see the ability to plug them into our infrastructure, and where there is expansion capability of the mineral resources at those particular projects. So our focus is on production and development at Point Roos and at Goldboro and hopefully at Hammerdown, but then also on the exploration side, it's exploration around those immediate areas because we think there's a lot of value in expanding those mineral resources. If we can find other projects like Hammerdown and like Goldboro, we'd certainly want to acquire those if they've got the same characteristics. But right now, the Great Northern Project is more of an early stage project. It needs a lot more grassroots exploration to define it. So that's why we believe that there's more value in spinning it out and putting it in the hands of an operator that can focus on it. We can't focus on it right now. So it's sitting on our balance sheet. It's not generating any value for us. So if we can create a strategy where we can generate value, then of course that'll accrue to our shareholders and of course the Maritime shareholders if they come on board. Let's see if there's anything else. I think that's generally what we've got for questions. I want to thank everybody for participating and being on this webcast. As I mentioned before, we think we've got a very compelling strategy here. I think it will accrue to the benefit of both Anaconda and Maritime shareholders. And we would certainly appreciate your support. And if there's anything we can do to help you with the tendering process, do not hesitate to reach out to us. Thank you very much. Take care.